The Australian Royal Commission report, this is the one that came out last night on the financial sector, a weighty report. The stock market seems to have breathed a sigh of relief today.
Yes.
Why is that?
Because the recommendations mostly deal with culture, conduct of the banks, their sales practices, the way they interact with consumers, less so with the structure of the banks themselves, which would have been a much more serious thing for the banks to deal with if they had to have revamped their structure, changed things up, sold some pieces. Goodness knows, anything to do with dismantling would have been a real dark day for investors. So investors were bracing themselves for something like that. It didn't eventuate, and as a result, the share market reflected the relief that investors were feeling over that.
That's interesting, given that most people regard that report as a real dressing down with a number of recommendations, but not enough to scare the market.
No, well, because the market was, I guess, pricing in the worst case scenario.
Yeah.
And for brokers who sell bank services, mortgages, and that sort of thing, they are facing an uncertain future because some of the recommendations recommend that they don't get paid some of the fees that they have been paid in the past. So that is a threat to their industry. That's a different story, though. Yeah.
Investment returns on KiwiSaver funds, they've kind of taken a bit of a hit. What's the damage and why?
We've been talking a lot about volatility in the market, and that is one of the, well, that is the reason. We had a big sell down of shares in the last quarter, that's the last 3 months of 2018, which marked down a lot of the value of a lot of big companies that KiwiSaver funds typically are invested in. Not just here in New Zealand, but in Australia, and the Australian market took a huge hit, partly because of the financial sector, which we talked about just now. So in the case of Australia, their share market value fell overall for the year by, let's see, a drop of 2.8% compared with the New Zealand market at 4.9%. So we gained 4.9%. The Australian market went down. So if you were all invested into the New Zealand market, you would have done better if you had had a trans-Tasman exposure there. So overall, New Zealand market is more resilient than the Australian market, but don't forget, of course, the financial services sector took a big hit there. So.
And anything else exciting happening on the markets today, Nona?
Well, because of this, the New Zealand market, the NZX Top 50 Index, we ended up more than 1%. That's to 94 points up to 9,074. And that was mostly led by AMP, which had been hard hit previously, Westpac and ANZ, which are dual listed. Just a note there, the ASX 200 was up more than 2%. And our dollar is trading at just under 69 cents. I mean, like just under 69 cents US, 95.1 Australian and 52.9 British pence. And that's it.
Thanks, Nona. That's Nona Pelletier with your business update.